Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden treasures, or shall we say, the hidden IS in corporate filings. Today we're digging into a very specific type of report from John Deere Capital Corp, and let's just say it is all about making new money, or in this case, new notes. So what exactly is this Form 8? Think of it as a company's way of sending out a special bulletin to the public. It is used to announce major events that shareholders and investors really need to know about. And this one from John Deere Capital Corp on the 7th of January 2026 is all about some new debt they're issuing. Now, the most interesting part of this filing, as always, revolves around what this means financially for John Deere Capital Corp. They are issuing $400 million worth of new debt. This isn't a small sum. It is essentially the company borrowing a huge amount of money from investors, promising to pay it back with interest over the next few years, specifically by the 7th of January, 2028. This is a common strategy for large corporations to fund their operations expansion, or in this case, likely to finance the equipment sales for its parent company, John Deere. This filing also includes some official legal opinions from a law firm named Kirkland and Ellis LP. These are important because they confirm that the new debt issuance is a legal and valid thing. It is like getting a doctor's note to say everything's okay with the company's financial health in this specific transaction. You'll also see a consent from the same law firm that is included in Exhibit 5.1. This just means they're giving permission for their opinion to be used in this filing, which is standard procedure. They are essentially saying, yes, we stand by our legal assessment of this debt issuance. And finally, there is something called a cover page interactive data file. This is for all you tech-savvy investors out there. It is a digital format that allows computers to easily read and process the key information from the filing, making it more accessible for automated analysis. So, what is the big story here? John Deere Capital Corp is borrowing a significant amount of money, $400 million. To fuel its business, this tells us a few things. On one hand, it shows confidence from investors who are willing to lend the company money. It also indicates that the company has plans and needs for this capital, likely related to supporting the sales of John Deere equipment. Companies often issue debt when they anticipate growth or need to refinance existing obligations. The fact that they are issuing senior notes means these debt holders will be among the first to get paid back if anything were to go wrong, which is a good sign for those lending money. Looking at this purely from a financial decoder perspective, this move signifies that John Deere Capital Corp is actively managing its capital structure. They are leveraging debt, which can be a cost. Effective way to finance operations, especially if interest rates are favorable. However, it also increases the company's financial obligations. When you take on more debt, your interest payments go up, and this can put pressure on your earnings if revenues don't keep pace, or if interest rates rise unexpectedly. For John Deere Capital Corp, the key will be to ensure that the capital raised through these notes is effectively deployed to generate returns that more than cover the cost of this new debt. We should also consider the broader context. John Deere is a major player in agriculture and construction. Their financing arm, John Deere Capital Corp, plays a crucial role in making their equipment accessible to customers through financing options. This debt issuance is therefore a vital part of the overall John Deere ecosystem, as long as the demand for their equipment remains strong and their customers are able to repay their loans. These new notes should not pose a significant risk. In conclusion, this filing is straightforward. John Deere Capital Corp is raising $400 million by issuing debt. It is a standard corporate finance move that signals a need for capital, likely to support sales and operations. The key for investors to watch will be how effectively this capital is used to drive profitable growth, and whether the company can comfortably manage its increased debt burden. While this filing doesn't reveal any dramatic news, it is a crucial piece of information for understanding the financial machinery that keeps a giant like John Deere running. Alright, that is our breakdown of John Deere Capital Corp's latest filing. What is your take on this debt issuance and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.